Good morning and welcome to another pre-market review session with the Market Trader. My name's Ray, the Market Trader. And before we get started, we'll need to get through our obligatory risk disclosure. Okay, so just kind of review that here. Just want to remind everyone, let's see, where is it? Yeah, I just want to remind everyone that the content that's being published and distributed by the Market Trader and its affiliates is to be treated as general information only. None of the information provided by the company or contained herein is intended as investment advice and offer to buy, sell, recommend, endorse, sponsor any security, company, or fund. We all understand that the use of this information contained herein is to be used at your own risk, and the company, its partners, representatives, agents, employees, and contractors assume no responsibility or liability for any use or misuse of such information. Future trading does carry a fair amount of risk, because not for every investor. Investor could potentially lose all or more of their investment capital. Only risk capital money that can be lost without jeopardizing one's financial security or lifestyle should be used for trading, and only those individuals with sufficient risk capital should consider trading. Again, nothing contained herein is a solicitation or an offer to buy, sell futures, options, or Forex, and past performance is not necessarily indicative of future results. All right. Good morning, Dirk. Good morning, Antha. All right. So we're going to go, now that we've gotten through the risk disclosure, we're going to go ahead and turn our attention to the news, okay, and see what news do we have in store today that has an impact on the markets here, okay? So today is a very important day, okay, because we have interest rate communication, FOMC, coming out at 2 p.m. today, okay? So that definitely is probably the highlight of the news that has the biggest impact on moving the markets, okay? Prior to that, we have some, so for the crude oil traders, we have the EIA crude oil inventory report. We've already mentioned that we have the FOMC interest rate decision, and that's pretty much it. So again, the interest rate decision is the driver today. Okay, so today could be a day that you might want to potentially, sit on the sidelines and watch, or maybe look at markets that aren't impacted by this decision, because there's always this possibility leading up to the report that the markets could be a little bit on the dull side, because nobody wants to be a part of the market with such an important decision. Okay, so in any case, something to keep in mind. Okay, all right. Let's go ahead now and move into our the trading platform here, and we're going to go ahead and start in on. See if I can locate it here. All right, right here. All right, there we are. Hopefully you guys can see that. Okay. We're going to go ahead and start in on the gold chart, and then we'll move our way into the other charts here. Okay. Let's see. All right, so we're going to go ahead and start off with the daily chart. Okay, daily chart, as you guys know, we've been talking about this for some time now. We see a chart that is ranging. Okay, it's not a market that has been trending in any one direction. As you can see here, we have a lot of candles. Okay, a lot of candles here that are overlapping. Right, we have bearish and bullish candles. Right, really not giving us much in the way of direction. It's coiling. Right, a market that is coiling. Right. So on a larger scale, you can see that we are, creating this, symmetrical triangle pattern, right? And then on the more near scale, you can see that we're developing a little bit of a bull flag pattern, right? Right. So again, a market that is coiling, not moving in any one direction, but quite possibly waiting for that same news that we were talking about earlier. The interest rate decision can and will have an impact on how gold moves here. Okay, so daily indicating that the market is in a range. All right, moving down to the 4-hour chart. Looking at the 4-hour chart, again, same range, just more candles, right? You can see that we are in a very consolidated range here. Right now, it appears kind of on the lower end, right? You see this value range that we're currently in, right in the middle, right? We're in the middle of this range. Okay, really nothing here to offer us as far as traders, unless we are willing to trade the ranges, really willing to trade the extremes of these ranges. Okay. Let's take a look now at the 30-minute chart. 30-minute chart. We're going to go ahead and expand this a bit. We're going to go ahead and remove our drawing since we already have a color on the fact that we are in some sort of range. We're going to go ahead and open up the fixed range volume profile. Fixed range volume profile here, and we're going to go ahead and start in and close here. Okay. Here we are. So we made an attempt, right? We made an attempt to move to the downside, right? Got a little extension to the downside, and now with price, looks like with this current candle, there's the potential that we could accept value from Friday. I'm not Friday, from Tuesday. Okay, so if we do indeed accept that, don't see the chart. Okay, let's see. I'll reshare here. Okay, I'll pause here for a couple of. Okay, perfect. Okay, all right, guys. I apologize. All right. So in any case, here you can see, right, that price is kind of working its way back into value from yesterday. Now, certainly, revisiting settlement price up here at 42.36 from its current levels is certainly not out of the question. Okay, right. So that's certainly a visual target for the market. Let's go ahead and take a look at the initial balance ranges here. All right, and see what the initial balance range for the various markets offer us as far as insight here. Okay, so we're going to go ahead and take a look at the Asia market. Okay, Asia market. Right. So during Asia, right, we got a little bit of a sell-off. Right, we got market to kind of move bearish. All right, and moving into the London market. Okay, looking at London, you can see that maybe we are in the midst of maybe some sort of failed auction, right? So the question now becomes that we did manage to get price above our 9 EMA, still hasn't gotten above our VWAP, and there's some resistance above us. Now, given that we are in range, we probably don't want to participate in a ranging market, okay, in range, right? If we are in a ranging market, we need to focus our attention on the extremes. So 42.45, 42.41. These are some of the areas, right? These are some of the areas that we should be focusing in on, right? Because we're not in a necessarily a trending market, right? Okay. If we were in a trending market, I would be saying, okay, well, we're up against the VWAP, right? And the current trend is bearish. We should expect a continuation move to the downside. But in a ranging market, we're basically going from the bottom end of the range to the top end of the range, and we've been doing that for some time, right? You can see that the pattern has been from bottom of range to top of range. Okay, so again, a little bit mixed, right? So we have Asia looking a bit bearish, London looking a bit bullish. Okay, a classic definition of range behavior. So headed into the session, headed into the session prior to the FOMC, my expectation is that the market will continue to stay in range until the FOMC minutes. Okay, and then once we get the FOMC minutes, we will get potentially some sort of move. Right. Until then, we're probably better served. Okay, probably be better served in sitting this market aside, because unless we get the market to move to an area where we've seen evidence of a certain set of participants. Okay, that's really what it comes down to. Okay, so headed into the session, gold for me looks a bit on the range side. Of late, we've been a little bit on the bearish side with Asia. Now we have London coming into an area where we could naturally expect price to continue to the downside. That would certainly be a possibility, right? If price manages to close above, then obviously we mentioned settlement above us, and then the other side of the value range is as reasonable targets for that move. Okay, so that's kind of what I have for you for gold. Again, a market that's consolidating. Let's take a look at crude oil. Okay, so crude oil prior to the EIA. Okay, we have inventories today, as I mentioned earlier. We're going to go ahead and take a look at the daily chart, and again, remove some of our drawings. And again, you can see that the market is in some sort of range, right? There's range price action going on in the crude oil, similar to what we were saying with gold. Now we've been in this range for quite some time, right? So this is working on a month, a little over a month now, a month and a couple of weeks of range kind of price action. Now, if we look at this from left to right, you can see that the market continues to show us signs that the market is bearish. It's in bearish structure here, right? So again, until we break this structure, until we make some higher highs and higher lows, we have to continue to look for opportunities, in my humble opinion, to the downside. Okay. All right. Let's take a look at the 4-hour, see what kind of context we can get from the 4-hour. Okay. We'll turn off our initial balance ranges. Okay, so again, you can see here on the 4-hour, if all we had to look at, right, if all we had to look at was these most recent candles, you can see that the market has been in some sort of bearish structure. And not only that, we're developing continued structure to the downside. We have a developing 4-hour engulfing candle. Okay, we're making our lower lows and lower highs, right? And we're in the process of making a candle that is looking to engulf this current candle here. Okay, so the market, if I'm just to look at this, is a market that is bearish. Now, as I get more additional context, you can see that the market is coming into some areas where we could see some support, right? We've been down here before, okay, and we managed to find some buyers, right? So this 5750 level seems to be an area of interest. Okay, seems to be an area of interest, right? Around this 5785, 5775, somewhere in that range would be a reasonable buy area, right? This would be a buy zone, right? I'm just going to mark it here. 5750, assuming that we get the price action, to align with that view, right? Because we can see here on the left-hand side that when we've come to this area in the past, that we found buyers. Okay. All right. Let's take a look at the 30-minute chart, see what kind of context we can get from that. So price is right up against or near our settlement price from yesterday. If I go ahead and take a look at the fixed range volume profile and look at, say, Tuesday here, there it is. You can see that price is inside the value range from yesterday. Okay. So if we're inside value, again, we can expect balanced price action. All right. We made an attempt to extend price to the upside, but that was met with sellers. So every time we made a move to move price higher, it's been met with sellers. Okay. Let's see. Let's go ahead now and take a look at the initial balance ranges. Okay, so looking at the initial balance ranges, we'll start off with Asia. Okay, so Asia, again, we were pretty much neutral almost through the entire range of Asia. Okay. Then once we got to London, we started to find some activity. Okay. Looking at London, you can see that we made an attempt to extend, and now we appear to be in some sort of failed auction to the downside, right? So we extended to the upside, got to about the 100% extension, and basically found sellers, right? Somewhere in this middle of this range. And they managed to get price back into this initial balance range. And now we're back inside an area of balance. Okay. So again, an area that I'm going to be focused in on certainly is 58, somewhere around this 58 range, because I do see that 58 has garnered some interest. The same people who drove price to the upside, chances are they could be available here, right? Around this area, around 58, 58, maybe 57, 80, somewhere in that range. Okay. If I'm more interested on the sell side, well, I would say that we need to focus in on selling strength. 58.43, the bottom end of initial balance would be an area. Maybe the top end of value here at 58.60. These are areas where I can maybe potentially look for an opportunity to the sell side. Right now, given the proximity of these demand zones, it appears that maybe market could offer me an opportunity for the market to potentially rotate its way back the other direction. Okay. All right. Let's see. Okay, let's go ahead now. I'm just kind of taking a look at my like indicator. So before I go ahead and move on to the equity markets, guys, just want to kind of again thank those who continue to support me. To those who have yet to hit the like button, I would encourage you to do so. If you're not already a subscriber, to subscribe, and then and not be shy when it comes to leaving a comment or two on the portal, indicating on how these reviews are supporting you in your analysis of the markets. Okay. Now that with that said, we'll go ahead and move on to the equity markets. Okay, ahead of FOMC here. All right. So we'll go ahead and take a look at this. We'll start off with the daily chart. Okay. Remove our drawings. Okay. So looking at the daily. Okay. So again, you can see that the market has been kind of stalling here a bit for the last couple of days. Really did not make any a meaningful direction in the last couple of days. But it is a market, right? Maybe that it has been bullish, right? But maybe it has been slowing down in its momentum to the upside. 26,800, or is it 26? No, 25,800 or 25,850 appears to be an area of some resistance. Okay, if I look at this on the longer side, you can see that the market has been in some sort of range, and we've been in the bullish side of that range for some time. Now, the question now becomes is how do we react? How do we continue to react around 25,800? We continue to coil right underneath that level, right? So if we get some favorable decision on rates, that could cause the market to rally, right? If we get an unfavorable decision on rates, we could see the market rotate back in range, would be perfectly reasonable, right? Could rotate back in range to the other side of this value range that we have here on the right-hand side. So we're basically at the upper end of value in some sort of range, okay? All right, let's take a look at the 4-hour chart. All right, looking at the 4-hour chart. All right, we're going to go ahead and turn off at the initial balance ranges. Okay, and take a look. Let's take a look. Okay, so looking at the initial balance ranges, again, you can see a market has been kind of sluggish, right, in any direction, right? You see a lot of overlapping prices. We did make a move. Maybe that would indicate, right, that maybe we were making a break to the downside, right? If I look at my channel, you can see that price broke that range. And what's interesting is that it has not been able to get back inside that channel, right? Has not been able to get back inside that channel. So the question now becomes, are we in a situation where the market maybe is in the beginning stages of maybe a rotation lower? Okay. We have not been able to make a new high of late, right? We have not been able to get above 25,800. And the longer we hang around this area, right, the greater the chance that we rotate the other direction. Okay. So this being an area of some resistance. Okay. At the moment. All right. All right. So let's go ahead now and move into the 30-minute chart. Let's see what additional context we can get from the 30-minute here. Okay. So you can see, right, we've been in a range of late, right? Ever since Monday. High end of the range, 25,742. Low end of the range, 25,565. And we've been bouncing in that range since Monday. Okay, bouncing in this range. We found balance between sellers and buyers. Okay, leading up to the FOMC meeting. Okay, so again, probably a good idea, right? If we're expecting to get some sort of move out of this market, either wait for this FOMC meeting to take place and then look, or we participate in the opposite extremes of the ranges, right? 740 on the high side. I would say maybe 600 to maybe 575 on the low side. Okay. Let's go ahead and take a look at the fixed range volume profile, but I suspect I know what I'm going to find. I'm going to find a market that is in range. Okay. But we'll go ahead and do the exercise here, and we'll go ahead and do that. All right. So again, you see a market that's been inside the value range of yesterday. Now we are at the low end of the range. Okay. We are at the low end of the range. So indicating maybe, again, that this would be a reasonable, kind of discount area, right? For buyers potentially, right? We got a nice move to the upside. We've come back to the low end of value. I would say that's probably another area here around 615. Right? Could be it could be an area where we could potentially entertain a long. Okay. Why do I entertain a long? Well, I see evidence here on the left-hand side, right? I look on the left-hand side, I look to the left, and where have my buyers been? Well, exact same area that I'm looking at right now. Okay. So this area could offer us a reversal back to the other side of the range. Is this a big enough range? Well, that's a buyer. That's an investor decision, right? That's a trader decision, right? Do I have the account size, right? Can I manage my risk in this trade? Is there enough risk reward in this trade? I would say you'd have to be, pretty close to the extremes of these ranges to really offer you an opportunity, right? Unless I'm some sort of scalp trader, I'm only looking to take, a point or two for the markets, right? Okay, so fixed range indicating that the market is in some sort of range. We're going to go ahead and take a look at the initial balance ranges here. So looking at the initial balances, we're going to go ahead and open up the Tokyo range. You can see that we extended. Let's see if I can remove drawings here. Okay, you can see that at the tail end of the Asia session, we managed to extend the range to the upside. We got to the top end of the range, and what did we find? We found some aggressive sellers. And since then, we haven't been able to get above, right? We have not been able to get above this level, okay? Indicating that there's a fair amount of bearish pressure in this market. So Asia was initially bullish. Once we got to London was not aligned with that view. Okay. London actually is bearish. Okay. So you can see that we got a nice extension to the downside, right? We had price come back, right? Come back to the low end of the initial balance range. Okay. And what did we do away from that range? We reversed away from it. Again, initial balance low, offering us a nice location for a continuation trade to the downside. Okay. Now we're at a level, okay, that, is an important level, right? In order for the bulls to kind of continue to maintain or continue to be a part of this, is that this level around 25,600, 25,620, somewhere in that range. Okay. If buyers are serious, okay, then the expectation is that, we would find some buyers in this area. Otherwise, then it could open up the door for price to kind of come back to some of these levels below us, because we are, especially in the London side, we are quite, I would say, quite bearish in this market. Okay. So again, heading into the session, I would say, if I had to pick a direction, I would say, first of all, I would say that we're neutral. Okay. We are in a rangy market. But if I had to pick a direction at this point in time, I would say that more recently it's a bit more bearish, right? So bearish to neutral in this market. I think some key levels we've already mentioned, 620 and 600 are some key levels, right? If we are indeed in some sort of bearish structure, we need obviously to make a new low, okay? And if we are bullish, obviously we don't want the market to make a new low, okay? We want the market to make a new high, okay? So headed into the session, I would say neutral to bearish in the ES, in the NQ. We're going to go ahead now and move into the ES. All right, do a similar kind of analysis. We're going to start off with the daily chart. And again, you can see we've had a series of daily candles that have been more on the bearish side than the bullish side, right? We've had, up until now, we've had a market that was really trying to head higher. Now we got to about 6,900, and it seems that we found maybe some sellers up here at the highs, right? So over here at these levels, we found some sellers, right? So last few days, right, we've started to develop a little bit of bearish kind of price action. Now, have we broken? Have we made a new low? No, right? Have we created a series of candles that would indicate that we could head lower? Yes. But we need to break, I would say, below 6,800, maybe 6,830, right, to really begin to maybe say that this market has moved from a market that's been bullish to a market that's consolidating, is now bearish. Okay, we need to break some structure to the downside if we are going to embrace that. Otherwise, we're in some cases kind of coiling for maybe another potential move to the upside. Okay. All right, let's take a look at the 4-hour chart, and let's take a look and see what the 4-hour chart is offering us here. Okay, so looking at the 4-hour chart. Okay, so looking at the 4-hour chart, you can see that that price is below some of the indicators that we care about. It's below the 9 EMA, right? It's below the 9 EMA. It's not, maybe we'll look at this when we look at the 30-minute chart, but it may even be below our VWAP here. Okay, so you see, again, you can see a market that's been pretty bullish up until then, and start to show signs of more balanced price action, right? You can see that we're getting wicks on both ends of the candles here, right? Wicks on both ends of the candles. Really, not a whole lot of commitment in any one direction. All right, so in range, basically. Let's take a look at the 30-minute chart. Again, the pattern of lower lows and lower highs is becoming a little bit more evident on the 30-minute chart, right? Right. So we got a lower low, a lower high. Okay. A lower low right here. Okay. And now a lower high. Right. So are we destined for another lower low? That's a possibility, right? We are in some sort of bearish structure here on the 30-minute chart. Okay. Let's take a look at the fixed range volume profile, and let's see where price is in relation to yesterday's price action. All right, we're going to go ahead and drag that across here. All right, so you can see price is below our value range, right? We made a couple of attempts to accept value from yesterday, and they both been rejected. The second time, they weren't even able to get to the same high before sellers kind of stepped in here. So we are beginning to develop some price action that would indicate that maybe the market wants to head lower. Maybe there is an expectation that we're not going to get the kind of favorable rate decision that we're looking for out of the markets, and the market could potentially head lower. Okay, but in order for that to happen, right? In order for that to happen, we need to see price break this low here, right? 68.37, right? If we get price to break below this 68.37, we can use 68.37 as an area for a continuation move to the downside. Okay. Right now we're at the edge. We're below value from yesterday, and hanging around, right? Creating kind of a little bit of a neutral VWAP and a neutral a 9 EMA. All right, let's take a look at the initial balance ranges and see what the initial balance ranges have to offer here. All right, so we're going to go ahead and take a look at Tokyo here. Okay, so again, Asia initially made an attempt here to go higher, was rejected. Okay, we got a rejection, right? Failed auction all the way to the opposite end of the initial balance range and beyond. London came to be. Okay, London came to be, and London initially wasn't as bearish. Okay, well, actually, they were equally as bearish. Sorry, right? They were equally as bearish. They're initially equally as bearish. Again, we got back to this initial balance low range, and again found some sellers in this market. Okay, so as we head into the session, as we head into the New York session here, I think it stands to reason that we are seeing evidence of continued price action to the downside. Okay, so that heading into the session, that we are looking at a market here in the ES of maybe a move lower. Okay, so some levels to keep in mind here on the sell side, I would say 68.52 is the low end of the initial balance range. That would be a perfectly reasonable area to expect price to maybe continue or be able to participate in the move. If I'm more of a buyer, well, I would say that I need to look to the left here and see some evidence of areas where I can buy. I think certainly 6,800, we're ways away from it, but certainly 6,800 would be a level. 6,820 might be another outside level to the buy side. Okay. All right. Let's go ahead and close out with a review of the Dow, and we'll close this session. All right. So taking a look at the daily chart here. Okay, we're going to go ahead and look at what the daily chart is telling us. Okay, so again, we see a market that maybe is maybe slowing down a bit to the upside. Okay, momentum to the upside is maybe stalling here a bit, similar to what we were seeing in the other markets. Right now, we're at I would say an important kind of area of decision, right, for the buyers. Right, is the market going to be able to hold above say 47,400, 47,350, right? Those are, I would say, important areas for the bulls to hold in order for it to maintain or continue to maintain bullish structure, because it does appear like the market wants to move into some sort of range, some sort of area of consolidation, some sort of area of balance here. Okay, taking a look at the 4-hour chart. Okay, for our chart, again, we're starting to see some evidence here of some downside structure, right? We're making some lower lows and lower highs. We're going to go ahead and remove some of our drawings here. Oops, that's not what I wanted to do. Control-C. All right, let's no drawing is the initial balance. We'll go ahead and turn that off. Okay, so we're starting to get some lower lows and lower highs into this market. Okay, we are coming into some areas where we could find some buyers. I would say 47,310 would be a logical place for price to potentially reverse. Okay, we are kind of on the lower end of the value range. We have the value area low here that we're at, depending on how many candles I select here. Okay, 47,400 seems to be another logical area for price to potentially reverse away from. Okay, if I'm looking for maybe an opportunity to buy. If I'm looking to sell, well, I would need to see if I can maybe sell some strength, and we'll take a look here on the 30-minute chart to see if it gives us maybe some ideas there. We'll first take a look at the fixed range volume profile. We'll take a look and see where price is in relation to yesterday's price action. Okay, so this is Tuesday. We'll take a look here at the start of Tuesday, right about here. Right, we're going to go ahead and drag that across. Okay. So you can see that we're well below value, right? Well below value from yesterday. So folks are willing to pay a premium to be a part of this market to the downside. Okay. Taking a look at the initial balance ranges for the various markets prior to this, looking at Tokyo or Asia. Let's go ahead and open that up. Okay. You can see that the market was pretty much in range for the entirety of the session. London came around and basically said, okay, well, I'm a bit more bearish. Okay, so they extended to the downside. They rotated back to the high end. Okay, found a good logical location to continue right to the downside, and we are seeing some bearish activity since with support of volume here. Okay. So looking at all these markets, guys, we'll start back with this with the gold here, just to summarize kind of where we're at. So we're beginning to see maybe some bullish kind of behavior here in the gold. Okay. So we're seeing a market that is in range, but maybe looking to be a little bit more bullish of late, right? We did extend to the downside. We managed to get price back inside the initial balance range. We've rotated all the way through the initial balance range. So assuming that we can maybe make another high here, assuming that we can get above, say, 42.40 and ultimately above these highs, then we're obviously in a market that maybe is turning from range to bullish. Looking at the crude oil chart, I don't know what to tell you guys, right? We continue to show signs of weakness in this market. Okay. We're breaking below this initial balance, balance area. Now, I am marking this as a buy zone because this is an area where we've seen buyers in the past. But currently, right, we are in some sort of bearish momentum to the downside. I don't know about you, but I'm not necessarily looking to maybe catch a falling knife, right? This market would need to stabilize in order for me to look for an opportunity to entertain, right? So selling 58.17, 58.20 would be a logical thing to do here. 57.60, 57.50, I'll take a peek to the buy side. But if we continue to book these types of candles, it probably would be wise for me to look for opportunities to the sell side. And then on the equity side, we'll just look at the NASDAQ and the ES here. Right now, I would say the market is a bit, again, ranging. All right, a ranging market, possibly a market that is looking to head lower. Okay. If we can make a new low here below, say, 68, 600, 620, that would, I think, open up the door for maybe price to continue to the downside. Okay. And then ES is also similar. All have the same look and feel, all looking like neutral to bearish at the moment. Okay. All right. Let's see. See if there's any questions. I'm gonna with the time remaining, guys, I am going to take a peek at silver. Silver has been a market that I've been looking at of late here. So we're just going to take a peek here at silver, if you guys don't mind, and we'll go ahead and close the session. So looking at silver, looks like we had a gap open to the upside here. You can see that little gap up to the upside in the silver 4-hour chart. Also, well, maybe showing so kind of maybe a little bit of a pullback after that little move to the upside, but it is a market that has been bullish of late. Okay, you can see some pretty strong candles to the upside. We're getting a little bit of a pullback, but a market that's bullish nonetheless. Okay, looking at the 30-minute chart, this kind of appears to be kind of maybe a little bit of a retracement, a little bit of a slowdown, maybe in the momentum to the upside. Okay. So I'm kind of inclined here to kind of draw one of these kind of channels here. All right. And then maybe again, if I can get this break above, say, 61, 815. Okay. Then maybe that could restore maybe a move back to the upside. But again, similar to what we're seeing in the gold, it does appear to be kind of ranging at this point. We'll take a look at the fixed range volume profile. We'll compare yesterday's price action with today, and you can see that the price is above value. Okay, so this being an important area here, I would say. All right, right about this level here, this being maybe a relatively strong or important level of support. right? To see, okay, if it does manage, if we do close back inside value, would not be out of the realm of possibility here that we could rotate all the way through value, or at least down to settlement price of 68.35. Okay, seems like a logical place for price to come back to before maybe we see a continuation move maybe to the upside. Okay, so that's kind of what I have for you on the various markets. Like I said, I'm going to be my eyes are going to be peeled a little bit more, maybe with the silver and the gold markets prior to the FOMC meeting, and then maybe I'll turn my attention to crude oil. Okay, but today is a day of news. Today is a day of where markets could potentially move. Maybe a tad too volatile to be honest, to be a participant. So something to keep in mind on whether or not you want to trade this market or not. I would certainly not trade it up until the FOMC meeting, and then after that, we'll have to wait and see. At least a half hour after that FOMC, maybe you could start entertaining maybe some opportunities. Okay. All right, guys. Well, I think that's pretty much what I have here. Again, as you exit the door, don't be afraid with the likes. Don't be afraid with the reviews. Don't be afraid about anything that would indicate to others that this analysis is indeed supporting you and your understanding of the markets. So until our next review, guys, trade well, trade safe, trade like a pro, be a market trader. Have an excellent day trading, guys, and we'll talk again soon.